Markets are mixed as investors await key US inflation data. Space junk threatens the almost $200 billion space economy. And we explore what happens when a football club scores over $1 billion in revenue but misses out on trophies. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. Markets are mixed midweek with major Wall Street benchmarks in decline ahead of key inflation data, while Asian stocks mostly extended gains. Chinese stocks rose as leaders kick off the annual closed-door Central Economic Work Conference, where they will set economic targets and outline stimulus plans for the next year. South Korean indices also continued their upward trend a day after the country's parliament passed a downsized budget of $460 billion for 2025. Japanese stocks traded near flat as the wholesale inflation rate for November beat expectations, with the producer price index rising 3.7% year-on-year. Overnight in the US, stocks fell for a fourth straight day, losing around 0.3%. For more, we're joined by Lee Xingan in Kuala Lumpur. She's a financial market strategist consultant to XNES. Thanks for being with us, Ling. Now, let's take a look at China first. Leaders have convened for the annual World Economic Conference. What potential support measures can we expect for the year ahead?
Hello, so thanks for having me. So as you've mentioned, when the Chinese leaders meet for their annual economic conference, we are likely to see big focus on boosting domestic demand, especially with the ongoing trade tensions and risks with the US. The Chinese government is expected to push for more proactive fiscal measures and also potentially setting growth target of around 5% for 2025. And this could also mean higher deficit budget to fund the stimulus and more focus on boosting consumption as well as supporting the property market. The past efforts, we see that they focus more on industries like electric vehicles and infrastructure, but going forward, there could be shift towards policies that encourage more consumer spending.
Right, meanwhile, Japan's wholesale inflation has risen for a third month. Could the better-than-expected PPI data strengthen the case for the Bank of Japan to raise interest rates in its next meeting?
Yeah, exactly like you have mentioned, we saw that the PPI actually jumped at the fastest rate in 16 months this November. So that really put the spotlight on whether the Bank of Japan will hike interest rates soon. There has been ongoing debate as to whether we're going to be seeing that rate hike in December or January. And Governor Ueda has mentioned that the rate hike is on the horizon, but the economy is also showing the solid performance. But in terms of the view on whether Bank of Japan will hike rates, we can see that not everyone is on the same page with that. The Bank of Japan board member Nakamura has raised concerns about the sustainability of the wage growth as well as some signs of weakness in the economy. So I think that while inflation is certainly putting pressure on the Bank of Japan to act, there's still a lot of uncertainty going around the timing of the rate hike, and also combined with the lower liquidity that we're seeing in the holiday season, that could also lead to higher volatility in the yen's movements.
And over in the US, Lee, Wall Street has paused a recent rally. What are investors expecting to see from that key inflation data?
Yeah, so as investors await US key inflation data coming out, we can see that US markets recently retreated from record highs, as you have mentioned. And I think a big part of it is looking at the reading of the inflation data, because there's expectations that we will be going into the fourth straight month of inflation, firm inflation readings. So the CPI itself is forecasted to rise by 0.3% month over month in November, and that could also keep pressure on the Fed to cut rates. So if the data does come in as better than expected or in line with expectations, I think that market are largely anticipating a rate cut in December. But given the uncertainty, there could be easing in terms of the pace of the rate cuts going forward. So I think this could also help to ease or rather temper that upward momentum that we're seeing in the US stocks.
Okay, Lee Xingan, financial market strategist consultant at XNES. Thank you very much for being with us.
Thank you.
Now, sending satellites off into space is one thing, but bringing them back is much harder. And left up there, they just become trash, or space junk to be exact. And this has major economic consequences, as Emre Boz reports.
As more and more satellites are blasted into orbit and then become obsolete, the space above our planet and around the two space stations up there becomes more crowded, increasing the chance of collisions. Believe it or not, experts say there are around 100 million bits of junk floating around Earth. The Organization for Economic Cooperation and Development estimates that the global value of economic activity in space is worth $191 billion. And as junk increases, so too does the risk to this activity. The negative damage could cost 1.95% of global GDP in the long term if it's not cleared. Analysts say that too much junk up there could lead to the Kessler syndrome. This is when collisions cascade and lead to more self-generative collisions. The impacts on the space economy will be severe. Space applications such as weather forecasting and space-based communications could be lost. And if it becomes too crowded, it may be too risky to invest in this sector. As an example, a newly launched satellite provides services that aids and supports economic productivity. A future where space is too crowded for further projects will make increasing economic growth much harder.
For more, we're joined by Francisco Diego. He's a lecturer of physics and astronomy at UCL in London. Good to have you on the show with us, Francisco. Now, how does space junk threaten the almost $200 billion space economy?
It is a major problem, and it's a problem that we are experiencing here on Earth already with plastic pollution and this exponential increase in pollution that we have here on Earth, and now it's happening in space. Now we were listening about the Kessler effect, which is, once you have a particular amount of debris in space, the collisions will increase that debris. Even if you don't put more there, it's a kind of system that will expand itself because of the collision, creating more debris. So I don't know if we have reached that point yet, but that is a major danger, absolutely.
And what sort of economic risks could that Kessler effect have?
Well, it is important because then we are now in a position that we are generating the problem that is going to limit our activities in space, and certainly that sector will have to reduce the activities in order to keep a kind of sustainability. So it is running out of control. Certainly, what we need is regulation, and regulation will bring innovation. It's a good thing, because we will find ways of having sustainability and carry on with this. And yes, we are talking about billions of dollars, but we are talking about human lives as well, because we have now two space stations, the Chinese and the International Space Station. There will be more. And then by the time we go to the moon and all this, is going to be escalating. And then the astronauts will be at risk as well. So human lives are at the problem as well.
And what global efforts do you expect to see to address the space junk challenges?
We have several organizations. We have the United Nations Outer Space Treaty, or the regulator for space activities, and we have other organizations as well. But it has to be a global agreement. Remember, well, in space, and the same here on Earth, there are no boundaries for pollution. There are no boundaries. We are in a kind of global situation, and there has to be global cooperation with all the countries and all the private sector, everybody, to really follow these regulations as soon as possible, to avoid any increase in this debris. And then we have to mitigate what is already there. We have to bring down, or to find ways of cleaning the space already, to avoid this Kessler syndrome that may come in the near future.
Right, and what innovations can help sustain investment in space industries?
Well, the innovation, the regulations, for example, the obvious thing to do, if we launch a rocket, the regulations will say that we are responsible for that rocket to the end of its life. So whether that rocket comes back to the Earth or whether that rocket stays in orbit, we are responsible for that. It's not just we launch it and then we lose our responsibility there. So the Outer Space Treaty or the regulations will say you are responsible for that rocket, and you have to find out technologically the way of dispose of that rocket properly at the end of its life, either rocket or satellite. So either the orbit or it goes away from low Earth orbit, and it goes into outer space. But those regulations have to be implemented. It's a kind of circular economy, if you like. You produce something, you produce plastic here, you are responsible for that plastic. You cannot allow that plastic to go in the environment and become food, for example. It has to be all regulated. It is expensive. We have to find a way to do it, because otherwise we are destroying our own future.
Professor Francisco Diego from University College London, thank you very much for your time.
Pleasure.
Now a quick look at some of the other top business stories from around the world. The US Treasury Department has transferred $20 billion to a World Bank fund supporting Ukraine's economic recovery. The funds are part of a $50 billion G7 loan plan backed by frozen Russian assets. The move comes ahead of President-elect Donald Trump's inauguration to shield the aid from potential policy changes. The loan will provide Ukraine with 30 years of financial assistance as it continues to resist Russia's ongoing attacks. US auto giant General Motors is ending its robo-taxi operations following setbacks, including a high-profile accident in San Francisco. The Detroit-based manufacturer plans to merge its Cruise unit with GM's technical teams to focus on advanced driver assistance systems for personal vehicles. The move signals the carmaker's shift to near-term profitability, expecting $1 billion in annual savings by 2025. A US district judge in Oregon has blocked the $25 billion merger of grocery chains Kroger and Albertsons, agreeing with the Federal Trade Commissions. The judge ruled that the merger would eliminate substantial head-to-head competition between the two companies, which is harmful to consumers. The merger could also hurt workers by lowering their bargaining power. And SpaceX and its investors have reportedly agreed to buy up to $1.25 billion in insider shares, valuing the company at approximately $350 billion. The share price of $185 marks a significant increase from the $112 set in a previous valuation just 3 months ago. SpaceX is also offering to purchase up to $500 million worth of common stock as part of the transaction. Bayern Munich's financial performance in the 2023-24 season underscores the club's robust economic strategies and resilience. This financial success is particularly notable given the team's relatively poor showing last season. No trophies, but effective financial management and diversified income streams meant they could count the season a success. Bayern Munich reported a turnover of just over $1 billion, marking the first time the club has exceeded the $1 billion threshold, a reflection of the club's strong commercial operations and global appeal. The German club's pre-tax earnings rose by 15% to more than $66 million, while net profits saw a 21% increase, reaching $45.5 million. These figures indicate efficient cost management and successful revenue generation strategies. Bayern Munich continues to operate without any bank debt, underscoring its financial stability and prudent fiscal policies. Its debt-free status provides the club with greater financial flexibility and security. The club's membership has grown to nearly 382,000, the highest of any sports club worldwide. This expansive membership base enhances community engagement and contributes to the club's revenue through membership fees and related activities. With me in the studio now is our senior sports producer, Talha Duman. Talha, this is a major milestone for the club's finances. How has Bayern's strategy driven the $1 billion revenue?
Well, what they're doing right now is they're doing what every other big major club in Europe is trying to do, which is making people fans of not only just football, but of their club, making it cool to be a fan of Bayern Munich. And one of the ways that Bayern Munich is doing that is success on the pitch. Obviously, without scoring all those goals, lifting all that silverware, which Bayern Munich has, they have 33 German Bundesliga championships, the most ever in the country's top flight. And the closest club to come to that is Nuremberg with 9. They have 6 Champions League titles. And when you kind of transition from success on the pitch, that brings in money, that brings in eyes, that brings in making it cool to be a Bayern Munich fan. Not only with the apparel, you know, their jerseys are really flashy, they have really nice colors, they bring out new jersey kits every year for people to buy. You know, even if you're not a Bayern Munich fan, you look at their jerseys and think, I can, you know, sport this in the newsroom every once in a while. And with that, you know, there's more sponsorship. Their arena is called the Allianz Arena, Allianz being one of the biggest insurance companies. They're partnered with Adidas, one of the biggest clothing companies, right, sportswear companies, and they're also partnered with Audi. You know, if you're a Bayern Munich fan and if you want to be even cooler than your usual Bayern Munich fan, what would you do? You would go buy an Audi. So what Bayern Munich are doing, similar to the Real Madrids of the world, similar to the Barcelonas of the world, Manchester City, Manchester United, Paris Saint-Germain, they're making it cool to actually be a part of the club's success. And from there, you know, you just have to look at all the bigger brands in the world. You know, it's cool to have a Rolex. You know, is Rolex the most expensive watch out there? No. It's cool to drive a Tesla, to be tech savvy. So what football clubs are doing right now is they're transitioning, they're translating their success to making you feel, you know, a part of their whole success.
Right, and what can other clubs learn from Bayern's debt-free model to reach that same success?
Well, when you compare Bayern Munich to the other big clubs, as I mentioned, the Real Madrids of the world, what they're doing is, as per, you know, their officials' words, not mine, they're not really delving into the whole madness around, you know, transferring players from the international transfer market every year. You know, they're smart with their money, they're smart in how they spend their money. Until last year, they hadn't spent more than $100 million on transferring a player. Who did they bring in? Harry Kane, a record-breaking goal scorer from England, and it's paid dividends so far. You know, he's broken multiple Bundesliga records, so they're getting their money's worth out of that particular player. But also, they're being smart in how they sell their players. They're being smart in how they pay their players. And when you combine that with, you know, how smart they are and how, you know, as you mentioned in that graphic right there, you know, not really going into debt, that all plays a part into how successful you can be on the pitch. If the club doesn't have debt, that kind of puts less pressure on the players. They know they'll get paid. They know they'll get paid even more if they perform better. And compared to the other clubs, as you mentioned, they have close to 400,000 members, the most in European football right now, the most in the world, I believe. And that also brings in a certain kind of ownership that fans have towards the club. You know, German football has this rule called the 50% plus one rule, where the fans, the members of the club, have control, and that kind of protects the club against foreign investment. When you look at Italian football a couple of years ago, maybe 5-10 years ago, a lot of Chinese money went into the league, but when those same Chinese companies pulled the money out, that kind of made Italian football slide a bit. With German football, that's not happening. Even though they're not as popular of a league as, say, the Premier League, that means they don't get as much broadcast revenue. The way Bayern Munich are spending their money, not really feeling the pressure of the fans, that's made them even more successful.
Right, so less lavish spending as we're seeing in other leagues. Talha Duman, thank you very much for joining us.
Thank you, Farhan.
Now, we're constantly being told how artificial intelligence is transforming the future, from jobs to health to art and even online retail. Over the last 2 days, the World F e-commerce fair in Dubai brought together industry leaders, entrepreneurs and innovators from all over the world. Omar Bakalola was there and sent us this report.
From tracking your online shopping order to paying with just a tap, artificial intelligence is quietly shaping our daily lives. It helps organize the swift deliveries of groceries, the fraud alerts from your bank, and even the recommendations you see while browsing. But for businesses, AI is much more than convenience. It's a revolution. And last week, Dubai became a hub for discussions about this change. World F, organized by Turkish industry leaders, showcased cutting-edge technologies and created a platform for collaboration among global e-commerce professionals.
10.000'e yakın ziyaretçimiz var. Biz 5.000.
Our expectation was 5,000 visitors, but this number reached 10,000. This shows that e-commerce has gained significant momentum in this region after the pandemic. Exhibitors from 25 countries and visitors from 82 countries participate.
The event put artificial intelligence front and center, highlighting its growing influence across various sectors. From logistics to finance, artificial intelligence is reshaping a wide range of industries globally. Here in Dubai, companies are seeking new strategies to stay ahead in this fast-changing digital era. In logistics, AI is becoming the backbone of e-commerce operations. It's helping companies predict demand more accurately, optimize delivery routes, and ensure faster, more reliable services.
Planning the sources and managing them for between the differences peak and off-peak times is very difficult. So AI will help us to manage to make estimations of demand better. By that way, we can plan our sources better, which means that there will be a big cost efficiency in source planning.
The financial sector is also turning to AI to address some of the biggest challenges. Payment companies are using it to detect fraud in real time and offer personalized solutions, enhancing customer experience and trust.
I think artificial intelligence is here to stay, and not only here to stay, but I think the adoption will get more and more into financial businesses as well. We at World First also use AI. One of the use cases we have adopted AI is on the customer service side. So we have a personal assistant if you go to World First platform.
Whether it's improving deliveries, securing payments, or reshaping how we shop, AI isn't just the future of business, it's the present. Ömer Bakkaloğlu, TRT World, Dubai.
And it's officially the end of an era, end of the Eras Tour, I should say. Taylor Swift's worldwide jaunt became a global phenomenon, breaking records and hearts around the world. But beyond the music, it has brought in billions and reshaped the business of entertainment, as Lara Kılıçarslan reports.
Taylor Swift's Eras Tour has redefined what it means to be a superstar. It's lasted more than 20 months, visited over 50 cities, and earned over $2 billion in ticket sales, making it the highest-grossing concert tour in history. Taylor Swift's performed 149 shows, dazzling millions of fans. And her concerts are more than just music. They've become cultural phenomena. In Seattle, the energy of Swift's fans was so powerful, it created seismic activity, equivalent to a magnitude 2.3 earthquake.
Oh, I love her. I grew up with her and listened to her songs, so we like to listen to her music. Yeah.
I love her, and thank you so much for empowering young women. I think she's great.
The business impact of the tour is enormous. Local economies thrived as fans traveled and booked hotels. Swiftonomics boosted cities globally, creating a huge economic effect. Swift's merchandising hit record numbers with $200 million in sales in last year. And globally, her concert film added more than $260 million.
My ticket cost $3,000 on StubHub. Yeah, mine also costs roughly the same. It was more expensive than the flight from Australia.
As the tour comes to an end, its legacy shines bright. Swift's billion-dollar milestone is more than just music. It's a game changer. Music producers call Swift's tour the gold standard for the industry. And as she sang, this is the golden age of something good and right and real. It feels like her era of success is only beginning. Lara Kılıçarslan, TRT World.
Well, that's all your business news for now. Thanks for watching.